We have a much clearer picture of the health of the tech sector after the mega caps wrapped up their latest quarterly earnings. For Apple specifically, our next guest says it's all about the growing number of loyalists who get snapped up into the company's ecosystem after buying their first Apple product. On Google, he says it's more about AI. Joining us now, Gene Munster, Deepwater Asset Management Managing Partner. Gene, good morning. Good to see you.
Hi, Mike.
So Apple, it seemed as if it was a report that was more or less as expected, but, lower revenue growth, maybe projecting more of the same for another quarter. The market really backed off on that. You think it was a reassessment of long-term Apple growth prospects or something different?
Well, I think the pullback more broadly is just related to some of the longer-term growth expectations, like you said. It's down about 10% from where it was, down about 5% from where it was before they reported. And I think there's a bigger theme going on here, and that is this installed active base. And in 2 of the last 3 quarters, Apple has led their press release emphasizing this point, that this continues to grow. And I think investors are progressively starting to put more weight into the value of this. And the basic theme is pretty simple, is that when you buy an Apple product, you fall in love with the product, you buy additional products, whether it's services or a watch, and then you upgrade down the road. And that piece to me is remarkable because the fact that Apple stock is up 44% year to date, the NASDAQ is up 34%, speaks to, I think, what is this trend among investing and this theme about this active installed base. And I think that if you asked me to put the last 3 quarters into context, I would say they've been sluggish. I think that the December quarter, they pre-announced, they missed the miss. The March quarter, they got it down for June. The June quarter, they got it down for September. But yet the stock continues to broadly hang in there. And I think that this is evidence that there's a new dynamic, a new investing theme related to shares of Apple. And just a couple other quick points at it is that the investment thesis around Apple changes about every 5 to 10 years. The previous big theme was, of course, related to services. Now I think we're entering the theme related to the active installed base. And if you're curious how the active installed base is going to play out going forward, you can model this out. There's a waterfall model that you can put together, and effectively they can continue to grow their active base with the device sales being down 15, 20%. So I think that this is going to continue to be a reassuring factor for Apple investors, something that's been largely overlooked with all the noise in earnings.
But, I mean, the install base, let's say 2 billion users worldwide, it's a $2.9 trillion market cap. It didn't change that much in the last 7 months, and yet the stock, as you said, was up 40%. So I'm curious as to why that's a here and now investment prospect, even at a time when people are getting concerned about the longer, perhaps, upgrade cycles for iPhone.
That's, I guess, my point precisely, is that investors are getting more concerned about what these upgrade cycles are how they're going to each play out, but yet the stock has done relatively well. And it has not had the benefit, I think, of the AI theme. Apple's been progressive or has been judicious about talking about that. So my simple takeaway is that I think that the fact that this has not been a stellar period, I mean, they've done great relative to the rest of tech companies, but based on Apple standards, these have been relatively sluggish quarters. And I think that ultimately, this is evidence, the fact that investors are, I think the stock performance is evidence that there's something bigger going on. And this ultimately for Apple is positive for their multiple. Of course, look at consumer staples. Mike, I know you and I have talked about this. I think that Coca-Cola, Clorox, Procter & Gamble, those stocks are more of the comp now for Apple. And I think that investors are progressively going to be embracing that theme.
That's fair enough, although Apple's now more expensive than all those that you just mentioned on a forward PE basis. I want to want to get to Alphabet, though, because, it's interesting how it's gone from they might be a bit of a victim of the AI theme to now perhaps a beneficiary. So where's that stock situated in your view?
I think it's in a great position, and recently meeting with a broad group of investors, and they still view Google as going to be underperforming relative to Microsoft when it comes to AI. I think that's generally missing the point. I think that their new search experience, their generative search experience that's now in Google Labs, that's going to be rolled out later this year, I think is going to be a shift in terms of how consumers use search. Today, we use search for three primary purposes: for mostly to look up information, secondly, to buy things, and third, for navigation. And in the future, we're going to go to Google for asking questions and getting insights, and more importantly, doing tasks. I think of this as called personalized AI. I think Google is in a great position to do that. And I think generative search ultimately is going to increase the frequency that we're going to be using Google products. And while it's true, they're going to have to rethink their model, the advertising model. I think as engagement comes, so will follow revenue. And this is very similar to some of the themes that we saw a decade plus ago when Google was going from a desktop to a mobile search business. And what they're getting paid per search was dropping dramatically. But the number of searches was accelerating even faster. And the net of that created what was a great decade run with Google. I think we're in front of another decade. It trades at 20 times next year. Microsoft trades at 26. I think this stock is setting up for a great AI play over the next several years.